Assalamualaikum and good morning to our respectful supervisor, Ms. Nurul Shuhada binti Zaidi and my fellow classmates. My name is Nur Hazwani Mawaddah binti Abdul Karim 71194 and today I will present my final year project with the title of A Study of Malaysian Pharmaceutical Companies on Financial Leverage and Firm Performance. As the economy grows, so will debt consumption. A firm may maximize values by using debt and equity to fund cash-flowing assets. The pharmaceutical business has the most research and development. Malaysian pharmaceutical industry must devote significant resources and attention to the issue of intellectual property rights as Malaysia is still lagging to compete with other global businesses that dominated the pharmaceutical industry. Besides, having an excessive amount of leverage for a firm would reflect negatively on the organization's reputation in the eyes of investors and financial institutions. Generally, the objective of this research is going to investigate the relationship between debt financing toward firm performance of pharmaceutical firm in Malaysia by examining debt to equity ratio, interest coverage ratio, and total asset on research on asset of pharmaceutical companies in Malaysia. The literature review part are start by explaining variable by prior research. This study measures firm performance. Overall health is financial accomplishment. It outlines corporation main goals, particularly profit-driven ones. Inefficient management and industrial manufacturing may affect pharmaceutical business success. Innovative drugs and health-promoting products drive pharmaceutical growth. Next, independent variable. Financial leverage relates a company profits before interest and taxes to its price-earning ratio. High leverage firms are risky investment. Strong working capital management and swift cash conversion cycles are essential for businesses. Inflation-adjusted interest rates represent the actual cost of borrowing and the bank real return. Interest rates affect corporation borrowing and investment profits. Firm size. Depending on the firm asset, it may be assessed whether it is a large business. The size of a company is defined by the quantity of assets it has to invest. According to Susilawati and Suryaningsih 2020, a business worth increases as it grows. Ulah 2019 and Amondi 2020 found that financial leverage and firm performance has negative relationship. Meanwhile, John 2015 argues opposite. Mohammed 2016 stated that firm size has negative relationship toward firm performance, and Rahmat 2021 said that financial leverage has no effect to firm performance. For methodology part, I start with research design. Financial leverage and firm performance are analyzed descriptively. 7 pharmaceutical business trade on Bursa Malaysia main market. These research results are summarized using descriptive statistical analysis, the Durbin-Watson test, heteroscedasticity test, and multicollinearity test. Multiple regression use non-independent factor to predict one dependent variable. This study's significant creation is 5% and the results are statistically significant at 5%. The F statistic is used to determine whether all model coefficients are statistically significant, whereas R-squared and modified R-squared estimates the total variance explained by all predictor variables combined. Time series regression is good if R-squared is 0.8 or above. We will move on to the most important part, which is result and data findings. According to descriptive statistics, company size has the lowest standard deviation 0.768 and the lowest risk. ROA is 11.33, which means all pharmaceutical business are great at turning asset into profit. The average debt to equity ratio is 13.14 and the average interest coverage ratio is 65.68, showing that all Malaysian pharmaceutical company can pay their loan interest. The average size of 12.161 reflects similar market capitalization. All variables are far from zero. Left tail is longer than right tail, indicating a negative skew. As the data residual are autocorrelated, the null hypothesis was rejected based on the Durbin-Watson autocorrelation test. Since 0.987 is near to positive 1, one of these independent variables seems to be an excellent predictor of the dependent variable in this study. Research used gradual output coefficient to determine heteroscedasticity. Significant FL is 0.055 while significant IR is 0.70. FS variable of 0.001 showing a variable value less than 0.005, indicating a heteroscedasticity concern. FL and IR is greater than 0.05, thus we can reject the null hypothesis. Pearson correlation measure multicollinearity. ROA and FL correlated 0.026. Since this number is positive, these variables are positively connected. ROA and I are correlated at negative 0.144. Negative value indicate negative associate between variables. ROA and FS correlated at negative 0.619. Negative value indicates negative association between these two variables. The null hypothesis should not be rejected because explanatory variable lack multicollinearity. From the scatter plot matrix also show that the explanatory variables of this research do not have perfect multicollinearity. Multiple regression R equal to 0.630 indicates strong prediction. R square 0.397, therefore independent variable account for 39.7% of ROA variation. Adjusted R square is 0.368 means independent variable explain 36.8 of the dependent variable. F ratio in the preceding ANOVA table revealed that the test shows statistically significant ROA, which is 13.628. Therefore, the regression model fits the data well. As variable has the highest beta coefficient 0.641, it shows that FS help explain ROA when others factors do not. FL and IR had beta value of 0.123 and 0.017, indicate less contribution. Only FS significant value is smaller than 0.05, suggesting that it significantly predicts the dependent variables. Based on the hypothesis discussion, this study determined its goals were met. This study examined the link between Malaysian pharmaceutical businesses, debt to equity ratio, and return on assets. These findings are not statistically significant and reject the null hypothesis. Because of positive relationship, a company performance will improve if it employs more debt in its daily operation, and these findings are supported by Hong Lee 2019, John 2015, Muenda 2018. The second aim to assess the ROA and ICR are related in Malaysian pharmaceutical companies were also met. The findings are not statistically significant and do not reject the null hypothesis. Since this relationship is inversely related to firm performance, the business ability to pay interest will drop as performance improves, and this finding is supported by Iqbal and Usman 2018, Ilyukin 2015, and Samar and Hassan 2016. The third goal to determine whether ROA affected by total asset of Malaysian pharmaceutical companies was also explored. The findings are statistically significant but reject the null hypothesis. Since this relationship is negative, a company activities will shrink as its success increase, and these findings are supported by Imbagu and Olokayo 2018 and Mawenda 2018. Financial leverage and firm performance are not statistically associated. The strong growth potential of rising nations may explain their positive association. Using financial leverage to hold management accountable may improve the organization performance. A rise in interest rates decrease bond prices, which reduce a company's fixed income. Running a big corporation increases the chance of debt-related financial difficulties. This research has several shortcomings, including an inadequate sample size for statistical analysis. It is still valid and may be used as a reference in the future, since it includes all publicly listed pharmaceutical firms in Malaysia between 2011 and 2020. Malaysian pharmaceutical company and decision maker must take initiative to utilize steps as an alternate funding methods and must investigate new opportunities. All for my presentation for my research topic. Thank you for your attention. Any question can be directed to me after this.